Over the last several years, Ontario's ICI sector has experienced unprecedented levels of activity driven by transit expansion, energy projects, healthcare investments, manufacturing reshoring, and major institutional builds. At the same time, the industry has been dealing with labor shortages, inflationary pressures, supply chain disruptions, and rising costs. For a little over a year now, we've been dealing with uncertainty caused by escalating trade tensions between Canada and the US, including Trump's tariffs, which have created significant questions around investment confidence, material pricing, manufacturing competitiveness, and this future pace of construction activity across Ontario. It's clear that prolonged tariffs on steel, aluminum, automotive components, lumber, and manufactured goods are reshaping both the economy and construction demand forecasts in key sectors.
Welcome to OCS Talks, your source for all things related to Ontario's unionized ICI construction sector.
To help us make sense of where things are heading, we're joined by two people who spend their time studying exactly these trends. Irwin, Bess, and Bob Collins from BuildForce Canada are here to walk us through the methodology of how BuildForce develops its construction forecasts, where major investments are trending, what demand forecast looks like, and the significant projects they're watching over the next few years that will be influencing the market. BuildForce Canada's forecasting models examine construction investment activity, labor demand, demographics, retirement trends, regional project pipelines, and so much more that really kind of help this industry and the stakeholders understand where opportunities and pressures are emerging. I'm Brian Barron, CEO of the Ontario Construction Secretariat, and welcome to OCS Talks. Irwin and Bob, thanks for joining us.
Nice to see you again.
Thank you for having us.
Yeah, so before we get into the methodology, investment demands, and the upcoming work, can you explain a little bit for the listeners, really what does BuildForce Canada do, and why is its forecasting work so important as a planning tool for the industry? And Irwin, you can start if you'd like, or Bob.
Sure. Indeed, our forecasting work at BuildForce Canada is an important planning tool. And frankly, I can't think of a better time or more important time where we have to provide that value to the industry. And thinking about our mission at BuildForce Canada, I just want to say it's really about helping the construction and maintenance industry meet their workforce requirements. And we do that by providing reliable labor market information. And so I'm talking about our flagship Construction and Maintenance Looking Forward report. That's an annual report. This year's is out to 2035. And we also offer some other workforce development tools and resources. But put simply, at BuildForce, we are looking to do three things. First, what types of workers are needed? Second, where are they needed? And when are they needed? And we do that by basically tracking coast to coast multi-year planned investments and planned project activity, and how those demands are shaped by current and forward-looking economic and market conditions. And Brian, you talked about the tariff dispute, the trade dispute with the US. We have evolving conditions, macroeconomic conditions, geopolitical events. All of those events and also the policy responses are important for us to look at BuildForce. But in a nutshell, we translate those conditions into real demand for workers across 34 trades and occupations. So we're taking into account impacts of retirements, changing demographic conditions, and policies impacting the supply of skilled workers and tradespeople. So as you mentioned in your opening, we're seeing an unprecedented level of project activity, and our goal is to help industry and policymakers make sense of that, help with their planning decisions, ensure that the supply of workers with the right skills are in place at the right moment when they're needed. And I think looking at where we are now, and I mentioned this important moment for Canada, we're actually tracking a record number of projects. So yes, we're talking about building homes, transit, utilities, healthcare. Though all the nation building infrastructure that Canadians are familiar with, we're tracking those. We'll talk about the watch list and what's in our forecast and perhaps why some aren't in at this time. I think that's important. But the bottom line is we're approaching 800 projects in our forecast Canada-wide. So we price the value Canada-wide of those investments. We'll talk about Ontario, a bit of focus on that, at $500 billion. So $500 billion Canada-wide to 2035. So what makes BuildForce Canada's forecast, though, unique is the validation. So when we talk about the 10-year outlook and those forecasts. We actually build those forecasts with heavy engagement and collaboration with our labor market information committees across the country. Brian, as you know, believe you're a member of one of our committees in Ontario. We really appreciate the contribution of OCS and your involvement in those committees in Ontario. But what's unique is that we're bringing the contractors, unions, the associations together in every province and through those committees to take a real world look at what's happening on the ground for them, what they see in terms of our assumptions. They're our challenge function, and they're looking to see that we're not leaving any gaps, that our forecasts are credible, and that they could use them at the end of the day. So I just wanted to say that these LMI committees are a crucial factor. And so you can have data, but data without engagement doesn't make for good evidence-informed products that people can use for decisions.
So I think that, I think one of the points for me when I take a look at BuildForce, and really what became very clear to me when I was on one of those committees for Ontario, was getting that real-time feedback. I think it's one thing when you've got sort of the strict numbers and that sort of stuff, but really understanding from the different associations, the different groups and that sort of stuff that help to feed into your model. That's really kind of that sense check, that piece where you're going, does this look right? Do those numbers represent the right thing? And it's that double check on the system, I think, that I found very impressive, because at the very least then it's kind of you're taking that, that on the ground intel back into your model as well, which I thought was very helpful. One of the things that I do want to talk about while we're talking about a bit of the methodology and that sort of stuff is I'm not entirely sure that our listeners always really understand what goes in to these models. So looking specifically at Ontario, what data points are you guys using, and what's sort of the most influential in shaping the ICI forecast that we see for Ontario?
Maybe I'll step in there, because this is a big part of the role that I bring out to the committees. And it's really building from what Irwin just talked about there. Probably the most critical part, and I don't want to say that it's all about the major projects, but they tend to create the disruptions. And so the start point often is we spend a lot of time scraping data that identifies what those projects are, or if there's any trends going on in secondary data sources related to, say, commercial activity, other industrial buildings and all that. But really, that is the most important start point, and getting that grassroots feedback in terms of how these projects are coming on stream, what projects are going to be likely drive activity within the particular region. And I want to emphasize here, Irwin talked about it, and Brian, you said it at the beginning there, there's a long list of projects that are underway and proposed across all market segments. What's also unique to us in Ontario is you can't look at Ontario as Ontario. We have 5, well, actually now we expanded, we now have 6 regions, because there are different drivers in each region. You go to the GTA, you got a lot of power generation, transit, hospitals. You go up north, you got a lot of mining and supporting infrastructure, Eastern Ontario, on the institutional building side. And last year, and this is where the feedback comes from the committees, that grassroots, last year in the north, there was even some push to whether there's a separation within the northeast and the northwest. So you dig a little bit deeper in terms of some of those drivers. So, that's probably the most important starting point, not ignoring all the other secondary data sources, but those projects are really the ones that I would say, creates that energy within the province, creates that activity, creates those labor market demands across all market segments. And that is the other key piece. Yes, there's power, but there's hospitals, there's transit, there's wastewater systems. All these projects contribute to the labor market demands. And Irwin, I don't know if you want to sort of follow up that a little bit more to that.
Yeah, I'd just add that when I think about Ontario, basically it starts with what's real. Well, those real projects, the real timing, the real workforce conditions, working with what's known, that investment activity, retirements, apprenticeships, new entrants, mobility, all the regional conditions come into play. So I just want to say, that I think that's bang on in terms of what we're looking at here and what informs our forecasts.
So I want to come back to that real comment in just a second. But, when I take a look at sort of the major projects that are out there, it's, for lack of a better term, that's kind of what everybody's talking about. It's what's kind of sexy in the industry right now is you've got these multi-billion-dollar projects, these, nation changing projects, stuff coming from the major projects office and that sort of stuff. But how do you guys factor in sort of the bread and butter kind of stuff? Like we've got, you've got these mega projects that create sort of a bit of a vacuum behind them when they start up because it's just such a draw for workers. Material, equipment, everything goes to those projects. But we've still got things like high schools going on. We've got, strip malls. We've got all that other stuff. So how does that get factored into the forecast that you guys are looking at beyond that major project stuff?
So we have macroeconomic models, and the macroeconomic models take into account, whether it be policy changes that relates to, population growth, economic growth, all those factors, Brian, get that base load. And that base load gives you, in many times, sort of establishes what I'll call the trends, which could be going up or down. You talked about, say, the manufacturing sector, which is taking a little bit of a hit, on their current market. Some uncertainty has certainly walked a little bit down on the commercial side. So we may not be tracking, I don't want to say smaller, but some of the smaller scale commercial projects, but we pick that up through, industrial, commercial, institutional type projects other than the big capital projects. And the big capital projects, and they're not always the multi-billion dollars. They could be 50 million, they could be 100 million, depends on the region. That goes back to the stakeholders telling us what's important to them. What do you believe we should be accounting for in the system? So it's a hybrid system that we use these capital projects to what we've referred to as tuning, to allow us to capture those startups, big startups, and the wind downs and what the implication would be. So, it's a double edge that you get both the trend and these big capital projects, which most forecasting systems don't capture accurately because we're now introducing inputs on scale, timing, and scope of those projects.
So I want to kind of jump back to a comment that you made, Irwin, around sort of the real projects and as importantly, what we include in these forecasts. What don't you include? What do you intentionally keep out? Is there sort of a divide? Because there's lots of talk out there. There's lots of talk about different projects going on. There's lots of, speculation as to kind of where things are going, where they might not be going. How do you guys account for the things where we're going to actually allocate resources versus, I don't want to call them pipe dreams. Some of them certainly are, but other ones are going to be, hey, we're not 100% sure when that's going to come in. So how do you prepare the industry for those kinds of influxes in the work?
If I could, maybe I'll just continue on the flow here. So, Brian, that's a very interesting piece. And not to constantly come back to the committees. So the way we do this across Canada and within the regions of Ontario is we try the best we can maintain what we'll call major project lists. They have projects under the guidance of the committees and our own recommendations and knowledge, working with industry stakeholders at the committee level or separate of the committee level. These are what we call the active projects. These are the ones that are in the outlook scenario. Separate of that, and equally as important, is what we call the watch list. And as you say, there's a long list of projects being announced, but because they're announced don't necessarily mean they're going to be, real active projects, in the sense that we may lack details on scope. We may lack details on a true financial investment decision, which determines both the value and the schedule. So we take that back to the various industry stakeholders to say, here's what we're tracking, here's what our knowledge is. Of these projects, we look for some guidance whether they need to be taken into account. And so, you see lots of, a perfect example is Defence Canada. Lots of announcements, but we need a little bit more scope in terms of what those types of spending would be. And that really comes back to not developing, for lack of a better description, a high scenario. Because a project is announced, we need a little bit more confidence that it's likely to proceed. And that's true across the country. We see this on a regular basis. The projects are announced, but still doesn't have that, and I don't want to say necessarily final investment decision, need that the industry says we need to plan for this. So we have it there, we watch it, and then as soon as we finish one outlook scenario, we try to get as much information together, and that's the first list we start with on the next round. Have any of these move forward? So they're very big drivers in terms of watching what could change as we look on the future.
I think that's one of the important things to note when we take a look at the forecast that you guys are putting out, is taking into account those projects. So like when people look at it, it's not necessarily reflective of the projects that have been announced, but the ones that had sort of a true commitment to them, which I think is the really important part to really understand with this.
And I want to emphasize here, it's like, when we tap into these individual, these regional committees, it is very common for us post-meeting to tune projects. Tune projects based in terms of started, not started, schedule change, new projects added, or projects removed that might have went into a pause. That level of feedback, and that's usually what creates, differences between one outlook scenario to the next. You really have to listen to the grassroots, boots on the ground, so to speak, because they are close to what's happening.
Absolutely. So one more question in sort of the methodology side of things that I'm curious about, because it's, I'm relatively new to this side of the construction industry. So one of the things that really struck me when I was looking at the forecasts was they go out about 10 years from today. So I think that the latest, some of the latest stuff that I've seen is looking at sort of like 2036 and that kind of stuff, which obviously a lot changes. I mean, we've learned this from even the Honda plant, which has been put on indefinite hold, that everybody was hoping was going to come to fruition, but it doesn't appear to be for a lot of different reasons. But, when we look out, out that far, how reliable is that forecast? How much, stock should we put into that forecast when we start looking out sort of 10 years, especially in a volatile market like what we have right now? From my perspective, it was one of these things where I was going like, man, like it's like there's no crystal ball, right? We're doing the best we can with the information we got, right?
Absolutely. When we go back to when we first did a 10-year outlook, was really looking at the demographics, the retirements, because you had to look at a longer lens. So you have near-term planning, which many stakeholders look at that 3 to 5 year window. Then you got the long-term planning. So let's just say a stakeholder is looking at a project that could be in 2030. Another perfect example would be Bruce Power's new nuclear, Bruce C. They're looking at a longer lens. So they're trying to look at what's happening out in that period. Now, obviously, you have a higher confidence in that 3 to 5 year window, but there are lots of policies and different other things that come into play that you look at those long-term trends, long-term demographics. So, the confidence in the near term, obviously you know a little bit more about projects that are either underway and they're already taken on or just about to start. And we always look at the longer lens, but yes, I would agree that in some cases it's harder to get that timeline of those capital projects or what they're happening. Now, in Ontario, on the flip side, though, is, in some provinces, smaller provinces, you'll see that big swing up and down, because you don't know what's going to happen in the next 10 years, the next 5 years, part of the decade. In Ontario, it just keeps stepping up. We are tracking a lot of long-range projects in Ontario, certainly over the next few years, and then sustained over the long term. So, Brian, I think it's really about what you're looking towards from a policy perspective, the demographic side, and so it just looks at it from what the industry needs are, and it could be narrow, and you look at that narrow part of the lens. And then you look at the longer term if you're looking more at the demographic trends and what the implications could be.
Yeah, and I think it's, if you look at the subsectors, there's obviously going to be some subsectors that you've got a lot of confidence in what's going to happen in the long term. I mean, when you look at the power sector, transit, even institutional to a certain extent, those are projects that run many, many years until completion. So you can really kind of bank on those numbers. But when you're taking a look at, say, commercial and industrial, those are usually, there's obviously, this is a bit of a general statement, but, a little shorter term, they can happen a little quicker, end a little quicker, that kind of stuff. That's probably where we start to see some of the market go up and down over that forecasted period, right?
Yeah, and that is sort of the macro side of the equation that you're looking at those long-term trends. And commercial, for example, is a good one in a sense that, if you look at Ontario's population growth over the last decade and continue to go on, there are a lot of services and supports that need to be built into the long-term needs, whether that's, just commercial activities or even on the institutional, the aging demographics, long-term care. All those things are driven less by individual projects and more by trends of what's happening into economic growth and the population growth and the aging of the population. Those are all built in as assumptions, but that's about the best information that we review. You talk about the start of the next year, you start looking at those assumptions right away again.
So Bob, now I'd like to move on to sort of some of the ICI investment trends, a little bit more on sort of the major project side of things, and give kind of our listeners a sense as to where we're seeing some differences. So, when we look at Ontario's ICI sector today, what stands out most about the current cycle compared to previous growth periods, right? When we've kind of looked at it, sometimes we've got a lot of work in, we always got a lot of work in that sort of the heavy civil engineering side of things, everything else. But what are we looking at that's different looking forward versus what we've just been through?
This is the one that I think is the biggest factor in this round of analysis. So you mentioned at the onset about some uncertainty south of the border, all kinds of factors that are having some impacts on budgets, supply chain, costing, everything. So the biggest thing that stands out to me in this cycle is the timing of the projects, everything that we're tracking. Because any shifting of projects has a significant impact on the labor market dynamics. And so if I was to go back a year, for example, because I actually went back and took a peek, that when we looked at Ontario last year, we were looking at a window of about a peak in 2027.
Yeah.
28. Well, that's shifted now.
Yeah.
And it's shifted out now to more 29, 30. Why is it shifted? Projects that are underway are going a little bit longer. Projects that were scheduled to start have been delayed. And so that changes the whole dynamics. It also introduces a significant risk, because as these projects change, there is a risk that there's still the need the projects to go, and they could start stacking up. Under the current outlook scenario, we have a set, but I would say, Brian, that the most significant change I saw is the changing of those project schedules. Obviously, there were some micro indicators as well that would change, but that was probably the one that sort of stood out the most to me. On the non-residential side, on the residential side, we have a much harder hit.
Oh, yeah.
Than we were looking at last year. Again, a labor market dynamic that carries over to that as well, and displaced workers. So, those are one of the things that, I think in the last cycle versus this cycle has changed significantly, that constant moving of projects. And I don't think we're done. So I think there's still movement on the projects. On the positive side, though, as you indicated, we are still seeing that trending up of a lot of activity, maybe a little softer in 2026, but then it will start stepping up again. So the projects are there, but I still think there are risks in the timing and scheduling of as we go forward. As I said, we've already seen a shift of that peak relative to 12 months ago.
Well, I think we've been very fortunate in Ontario because the government has been able to really kind of inject a fair bit of money into the infrastructure side of things. So ICI, there's a huge pipeline of work that's sitting there, which has helped, I think, soften that blow, whereas in residential, obviously that doesn't exist, and they're going through a bit of a tough point right now, which obviously we'll come back to when we talk a little bit about the demand side of things in terms of the workforce. Now, one of the things, when we take a look at kind of that sustained growth in Ontario in the non-residential sector, that's been driven by major projects to a large extent. So what sectors are currently driving the strongest demand?
Well, maybe if I continue, Irwin, I can sort of pop in there and then you can add to the end. I think, Brian, you already hit him. You talked about the public sector side. I mean, and it really depends on the geographic region you're in. If you look at the GTA, you have a lot of transit systems. You have a healthcare, education, big drivers. Let's not forget water treatment systems. A lot of those types of projects. And even with the, we talk about some of the hits that have been to the industrial sector. We still have a couple of big battery projects underway down in Port Colborne and St. Thomas. You mentioned about the Honda facility. So, we still see that. And the power generation and distribution, obviously, are big factors. And you said that the advantage that sort of Ontario had with all these types of spending, you got a unique situation where at Ontario Power Generation, one nuclear refurbishment is ending or has ended. It's followed by the next one to come on stream. Coupled with that, the first of potentially 4 SMRs, small modular reactors. So you can see all this sort of stuff. And then if you go further to the south side, you got Bruce Power with all their nuclear refurbishments going for the next several years. So Ontario's had sort of that buffer, I guess. in the sense of a lot of types of projects that are sustaining levels of activity and expected to increase. And I think that's been the advantage of Ontario. It's not dedicated to one market segment. It's a mix across many market segments that are driving activity. And then the north, obviously, and Eastern Ontario, the north got the mining activity and the potential for much more mining, and Eastern Ontario, institutional government buildings. So I think while the capital projects, I want to add that while the capital projects dominate a lot of our discussion, we shouldn't ignore another key market segment that is very important, and Irwin alluded to that at the beginning, is the maintenance. We are building a lot of stuff, and all those assets have to be maintained. And I'm not talking about just the big industrial, major shutdown, turnaround events, that type of stuff. Every building, and we're seeing steady growth on that maintenance market. Some trades rely on it heavily, and maybe less for others. So, I think Ontario has had a significant amount of growth over the last several years, and we're certainly seeing that to be sustained over the next few years as well. And Irwin, I don't know if you want to add some comments there.
Yeah, no, for sure. And we're talking about projects that are linked to broader public policy goals. So these are big projects. They have long cycles attached to them, multi-year planning horizons. And, you can think back to when 300 million was a mega project. Now we're talking several $billion. And so with that, and I'm glad you raised again that point around maintenance. At some point, we're talking about major shutdowns and turnaround events. And I think that's something that needs to come into the conversation going forward more and more. These are major public infrastructure projects. So ensuring the long-term viability of those will need workers. So it's an important point.
So when we take a look at that kind of stuff, and it's when we look at the nuclear side of things, those are, a lot of people joke around about them being lifetime projects, that sort of stuff, because they are very long in nature. You could work your entire career at Bruce or Darlington, maybe not so much Pickering right now, but there's a few of them that have major projects that are multi-year. But when we look at some of the other projects, so institutional, things like hospitals, schools, public infrastructure, that kind of stuff, are they really helping to stabilize the market during these periods of private sector uncertainty, right? Like there's a lot of projects that have either been paused where people are kind of waiting things out going, hey, we're not sure what's happening in the market. We don't want to make too many moves right now. What role does that public funding, those big projects play in stabilizing the market?
I can start in the sense that, absolutely, they are a big contributor to stability. I want to add that they are also necessary infrastructure that's needed to replace aging infrastructure, to meet the needs of a growing population and economic growth of Ontario. So they certainly do, Brian, add a degree of stability. And on the plus side, it's also a lot of, if you take healthcare, for example, there are healthcare projects across the province. It's not just unique that there are several. There's a heavier concentration in the GTA, but there's, down in Niagara, there's a project, one underway in Windsor. You got stuff going on up the north, underway and proposed. You got Eastern Ontario. So, that's a nice little buffer, I guess, to allow for those demands. And they're important to those regions, those big projects. And then the transit systems are probably more concentrated in the GTA and the central regions. So, yeah, they're welcome. They're needed. Not just from a labor market stability or activity stability, just from an economic growth stability for Ontario to meet the needs of a growing population.
Yeah. Irwin, do you have anything to add to that?
Well, I think something that does come up, and Bob alluded to the diversity within Ontario and the different regions. I think there's also the spectrum. When you think about the demand for projects, builds, maintenance, you also have workers that could be under pressure, like possibilities in different places. So to what extent are we also talking about competing demands for workers? And, we talk about having workers at the right place at the right time, but, we may need to rethink some of the traditional assumptions about where we can source labor and workers. So I think that's an also important part of this conversation. So that's where the project sequencing, but also where's that supply coming from? And that's why that 10-year horizon, some people would say, well, BuildForce has 10 years, like what visibility do you have? Like we plan in 5-year cycles, but I think getting workers into these projects and planning for what's coming means you have to start now, several years in advance, because it takes a lot of experience. It takes time to build people to the point of being a journey person. And we can talk about retirements at some point, but I think that's the bigger mix that needs to be factored in terms of mobility of labor as well to where the work is.
Certainly, I think and I do want to touch on. We'll hop into demand after this, but I think that's where it really becomes key, because this isn't. It's not flipping a switch. You can't just suddenly add workers to the industry, especially when we're dealing with the skilled trades. It takes time to go through an apprenticeship, and having started, and some of those apprenticeships are 4 or 5 years down the road. So to have them properly, with proper skills going onto those job sites, you have to have that forward vision. You have to really understand what's happening in the market as time goes on. Now, before we jump into that demand side of things, one of the things I do, and this might be a bit of an unfair question to you guys because it's a little bit tougher to kind of get your handle on, but from the private investment side of things, over the past year, we've heard lots of stories about companies that have held off, either they've moved operations somewhere else, but where some companies have sort of held back and said, "Geez, we're like things are just really uncertain right now. It is not a good time to make any significant moves." Do you have any sense as to are things getting better that way? Are they getting worse? Are they holding about the same in terms of the uncertainty? Are people starting to kind of get used to this? Kind of the ups and downs of the Trump presidency?
Well, I'll say this. I'd love to hear from Bob. At the outset, we talked about volatility. I think we may have used the word a few times already. If we haven't, we really should. We're living in volatile, uncertain times, and we're also looking at a complex environment geopolitically, but also on the projects that we're actually looking to build. So when I say people are getting used to it, I think that forecasts like BuildForce's forecasts, to put a plug in for it, brings some clarity in an environment of uncertainty in terms of what's happening, what we think is happening. And, we talked earlier about announcements. That doesn't necessarily translate into a project and a shovel in the ground, so to speak, and workers on site doing the work. So I think that that's where that granularity of labor market information becomes super important. That's something that I'm committed to doing with the teams, is to, again, continue that cycle, but with the detail that we can get to that's valuable, and that we don't stop. So we're finishing our 10-year outlook report in the next few weeks. It'll be out publicly. It's at the time of this broadcast. But when you think about it, we're starting the next one because everything keeps shifting. So it's a continuous process. Forecasting is not something you do and then you put it on the shelf for a few years and come back to it. At BuildForce, it's a constant cycle for us. Bob?
Yeah, I think, Brian, there's still an element, of wait and see. You just can't ignore that. You're probably seeing a little bit more of it on, I don't want to classify them as small or large projects, but, so there's going to be some of that continuing on into this year. And as Irwin talked about, that's the first thing we sort of dive into, what's changing from the big macro picture, what's changing for some of the major projects. But there's an element of it. There's still uncertainty in terms of costs, financing, all these factors that go into a decision. Our tool is try to make sure that labor is as best informed to be ready for projects that come on stream. But I think, we're probably still got another year of some degree of uncertainty in some market segments.
And I just want to add to that, Bob. You mentioned it's not just the contractors and the industry, but it's also policymakers. I can't underscore enough the importance of what we do for good public policy. And what I mean by that, evidence-informed policy, in my opinion, is the best policy. So, so when we talk about the volatility, uncertainty, and caution market, like how do interventions from a policy perspective or different ways of approaching this make a difference and build that confidence? And we can only do that by the continual look at the what's happening on the ground.
Yeah, for sure. Yeah, I think let's face it, we just keep adding layers of complexity to this stuff. You look at a war with Iran and gas prices and everything else, and you look at all that, and although there's sort of a ripple effect, and sometimes it can be a little bit delayed, it's basically all those costs continue to add up. And if you're a project owner looking to actually build something, saying, geez, it's like the cost from when I originally thought of this project to the actual, put a shovel in the ground has changed significantly. That's a significant business decision that you have to take when, you're not entirely sure what's going to be happening over the next little bit, sort of thing. So I can certainly appreciate where that comes from. And I can certainly appreciate the importance of the work that you guys are doing in helping to, at the very least, inform folks that way. Now, I'd like to move on to sort of the demand side of things. Last year, when we talked about the forecast with Bob and Bill Ferreira, there was, and I'm just going off memory, but we were looking for, I think by 2034, it was estimated that there'd be about, I think it was about 54,000 skilled trades workers short. Those numbers have changed a little bit. There's been some changes in the residential side, which has impacts on the ICI side in terms of the workforce demand and that sort of stuff. And I think now it's sitting somewhere in the 29, 30,000 person range, something like that. Let's talk a little bit about that. I want folks to understand kind of what goes into that, because I don't know that everybody sort of added up the fact that, we are now at a point where the baby boomer generation are all at retirement age. They're starting to leave the workforce. Now, some of them are staying in the workforce longer than they have in the past and that sort of stuff. But can you just kind of quickly walk me through what goes into that number? Because some people are saying, hey, we don't have a skilled trade shortage. And then other people are saying, absolutely, we do. And I'm not sure they fully understand the complexity of kind of what we're looking at with it. So can you give me sort of a quick rundown as to kind of how you come up with those numbers?
I mean, you hit on all the touch points, Brian, in terms of what we hit on several touch points. We're moving past some of that age critical people that are exiting the industry. Some are hanging on a little longer, but only for so long. Eventually,
it's coming.
Some hang on maybe too long, I don't know. But it's that part of trying to understand where the demands are going, and certainly on the residential side. So we would have had a much higher start point from where we would have gone last year versus this year. So it got hammered. That peels off a lot of people from that start end point. And that's the tricky part here, that when you're talking about those numbers, it's sometimes difficult because you're looking at a start point, say last year would have been 2024, to the end point, which then would have been 2034. Now we move the start and end points. We have to be careful sometimes when we look at a labor market diagnostic that looks at start and end points, because a lot of noise can happen in the middle. And we try as best we can. In some cases, we actually bring attention to where the peak is, which could be 28, 29, or 30. So those are more of the long-term trends, Brian, that we were talking about a little while ago. So yes, they're important measures. Obviously, we're going to see the retirement numbers go down lower as we go forward. If the project starts stretching out, going longer, and the peaks aren't as high, then your overall demands come down a little bit. So there are many factors that come into play there. In terms of labor market diagnostics, though, one of the most challenging points, and you just alluded to it, and I had it flagged on my notes, is, when you go out and start looking for workers, it depends on how individual projects are stacking up, but those skills and experience that we're talking about of the retirees, so we get these pinch points, we get these recruiting challenges that are very unique. You talk about the power sector, you talk about, big mechanical systems going into these massive hospitals. There are very specialized skills required for these jobs. That's where we hit the pinch points. And so when we're looking at Ontario as we see it today, we're seeing more steady levels of growth, right up to probably a peak of I'd say 29, 2030, and then sustained. While on a province-wide basis or a broad industry basis, you may not see as many of those individual pinch points, but I guarantee you when you get into very specific projects and contractors, there are cases where they're going to be saying, we cannot find the people. And that's the difference between bodies and skills and experience, and that's always the art of how contractors, owners, and labor providers bring those pieces together to meet the needs of the industry. So I would think there's always cases, given the levels of activity in Ontario, that we're going to have those pinch points along the way. But I want to be very careful in looking at an end point, start point, measurement, and they can change significantly based on, in this particular case, a significant hit to residential market, and probably a little bit of lowering on the non-res side, but it's more stretching out the projects that are underway.
No. And Bob, I just want to just pick up on something you said at retirements and experience. And I think that's the key. So when people are retiring, they're bringing years of experience with them. And so when you see the antidote or what the response is, looking at the mentorship, looking at the training, looking at the programs to bring people in earlier, and we could talk about that. But our point is, the retirements, when people read the report, I think it's about understanding the story behind that retirement number. What does that mean for the industry or segment of the industry that you're in? Finding that people are placed on what actions need to be taken to get that pipeline of talent ready, given where you see your projects going.
There are so many levers that can change. We started out last year without disruptions in the Middle East. We came in and we thought there would be certain things that will be unfolding from a trade issues and challenges and disruptions. So there are baseline assumptions that you make from a higher level macro that will carry forward in the modeling system as well. So it's often not necessarily just about major projects. It's about all those types of drivers. What happens with immigration?
Immigration policies,
If we walk back some of the immigration side of things.
Yeah.
On the flip side is, we see on the residential massive amounts of programs across the country to try to nurture affordability and availability of housing. And so there's baseline assumptions that can influence that endpoint, that long-term outlook. I always try to bring people to really focus on maybe a little bit of the near term, but the long term is important from a policy perspective that Irwin mentioned, as well as that aging demographics to keep an eye on, because sometimes work can slow, but you still got to bring people in, even if work is slowing in some regions.
Mm-hmm. And there's a mobility piece to that too, as well. So, but yeah, great.
No, and I think that's part of it, right? I mean, it's one thing to say, hey, we have enough workers in theory, we've got the right number for the amount of work going on, but construction really comes down to that logistical question, right? I mean, not all workers are on that project from day one to its completion. You're coming in different periods when that type of work is being required, and if that overlaps with another project that also needs those same workers at that same time, somebody's losing out there, and that's where we start to get that shortage. Is the workers may be available at some point, but maybe not right at that time, which then obviously results in delays and that sort of stuff, which is, I think, where, a lot of people are saying, hey, we've got enough people in the union halls to be able to do this. And you go, well, yeah, in theory you do, but there's also this other consideration of when do we see that demand really kind of spike for those folks? And are they happening at the same time over multiple projects? And that's where we start to, I think, we're seeing some of that shortage in there as well. So it's not always a question of just straight numbers. It's the timing as well, that we have to take a look at. Yeah. Now, in terms of, one of the reports that you guys generate as well looks at sort of individual trades and occupations, and looks at sort of the pressures of them. And it's, ranks them on a scale of 1 to 5, 1 being, yeah, there's lots of people, not a huge issue, 5 being, hey, we got a shortage. Do you have a sense as to kind of what the top, let's say 2 or 3 over the next couple of years would be that folks are looking for?
So let me sort of package without going through individual trades. So what we are seeing, I would say on the surface, like on the very surface, we're seeing a lot of balanced non-residential markets, with the exception of the north. We're definitely seeing that there are challenges there.
Now, is that a geographical issue though?
There's a volume of work up there too, Brian.
Okay.
There's a level of activity that's going on there. Plus, you're looking at a smaller workforce that create those challenges as well. And so, without going into individual trades, what happens, once we when we release the document and you'll see individual trades, sometimes it's driven by very specific projects. In other words, a project, let's use the battery facility in St. Thomas, was going to stack up. It's going to put a little bit of a pinch on a particular trades and occupations, probably on the mechanical side, depends on how it steps up. And the same thing with, if you go down to South Niagara with the hospital, you can hear some challenges there. The challenge that we run into sometimes is sort of the umbrella year-wide market condition versus peak activity within a year. And that is often when you start hearing of the recruiting challenges. They're running up to a peak season, let's just say summer, for example, and there's a lot of other work going on. And that's what we're seeing in Ontario. That mobilization that Irwin was talking about, heaven forbid you're doing one project in one region, and then there's another big one starting up another region, and guess what happens? You start looking over your shoulder, whoa, that's a 3-year project up there, and that mobility creates some pinch points. But I would say broadly, we're looking at some of the more balanced markets, but it's right on the edge. And so there's a lot of stuff that's waiting final investment decisions. And that is my biggest concern, I suppose, when we look at some of those projects. But, so we are running into those pinch points. I can't, off the top of my head, Brian, say there's any specific sets of trades. And I would say that if you look up north, you see it across several trades and occupations. And there's hospital work up there, there's mining work up there, there's power generation and refurbishment of the hydro facility, dams, and distribution. So it's a bit of a mix of a lot of things up in that area.
And I think that's where the communication between sort of the unions and the contractors really becomes critical, is really understanding when and where folks are needed so that they can supply those projects appropriately. Now, one of the things that I do want to jump into here just before we end is looking at some of the upcoming projects that you guys are watching. So, and before we kind of get into that, one of the things that I do want to mention as well is your forecast, I think, is slated to be released sometime in July. We'll have you back on to talk about provided this hasn't been too painful an experience for you, but we'll have you back on to talk about the forecast at that time. But I'm just kind of curious here, like, what are some of the projects that you're watching that may not be fully committed at this time, so they're not reflected in the numbers that you're putting out there or currently talking about?
The biggest one, Brian, that I think is sort of looming over our shoulder is obviously critical minerals. One project, one process. We're seeing some projects going through that particular process now, or framework. We've got a lot of discussion going on, which is very important. The necessary infrastructure to support that mining growth, related to the Ring of Fire Road, any power requirements. I mean, I took a quick peek the other day, and just the bigger projects, we're tracking probably $22 billion of mining projects. That's significant. Now, not all of them are going to go ahead, but I suspect over the next 3 to 5 years, that near-term window, some of these projects are going to get a final investment decision. So those are the ones I think in the north are certainly going to be. And with that becomes so much support infrastructure. And it's not just the mine, it's any milling that comes with process, and then any other processing further on down on the industrial side. Because, these projects have significant impacts, spin-off impacts right across the whole economy. Second up, more recent announcement, a lot of discussion over the last few weeks, Bruce Power, Bruce C, massive. Going to be big trade demands. Small modular reactors, Ontario Power Generation. We've got one in the system right now. We're pending 2, 3, and 4. You got the Meadford down there. The hydroelectric facility is surfacing again over the next while. The GTA, the Big Lift program, a lot of work going on there. We got a lot of wastewater system. And you've got the potential for a high-speed rail. And the other thing that's sort of popping up, I guess, is that you got to really keep your eye on is a long list of battery storage projects. We saw one last year, Skyview 2. These are big projects, and that was in Eastern Ontario. And the other one that's a competition across the country, data centers. Everybody wants data centers. So
yeah.
And they're big. I mean, and with that becomes all the infrastructure to support that. So, if I was going down the list of ones that I really want to keep my eye on, there's still hospital projects. The transit will be easing off a bit. The mining, number one, I think has a very high potential because there's a real push nationally on the critical mineral developments. We know the small modular reactors will be going ahead. So power generation and distribution will be a key market. And then just a broader perspective, with the continued growth of Ontario and the economy and the population, commercial will tag along with it. Other small industrial tags along with it. So these are not just one-off hits. They trickle across the economy.
Well, it really drives a lot of the construction, everything all the way down to residential even. I mean, you have to have somebody,
absolutely,
people to live and stay, and that's for stuff as this is happening. So so there's a huge ecosystem that comes along with each one of these for sure.
You know how often, Brian, I hear, we don't build that.
Yeah.
No, but you will get the aftershock of it.
Absolutely you will.
Right?
Yeah, they're all linked.
They're all linked, and they're enabling infrastructure too for all these projects. And we talk about workers and people moving; they need places to live. To your point, I would just add that someone would ask me, "What are the potential game changers?" Depending on where you are and your perspective on the industry and your business, any one of these could be game changers that Bob listed, or all of them. So,
absolutely. Well, gentlemen, I want to thank you guys. Your time today has been massive. Today's discussion really highlights the complexity of the moment that Ontario's construction industry is really operating in right now. I mean, we're no stranger to the complexity of what we're going through, but it certainly highlights, at the very least, and it gives me even greater insight knowing sort of what you guys are watching, what you're intentionally keeping out, which I think is really good, because that way the numbers we're seeing, those are real numbers. Those are things that we need to be really paying attention to. It's not the speculative kind of stuff. It's the what is it that we really need to kind of keep our eyes on. So a big thank you to both Irwin, Bess, and Bob Collins from BuildForce Canada for joining us and sharing their insights. It's invaluable as always. We'll have you guys back in July when the forecast is going to be released, because we want that up-to-date information. And with that, for more information on today's podcast and resources from the Ontario Construction Secretariat, please visit our website at iciconstruction.com and follow us on social media. Thank you.
Ontario Construction Secretariat. Knowledge to build on. Visit iciconstruction.com to learn more.